Hi, welcome back to the channel. And if you haven't watched my probabilities video, you should watch that because it's actually my predictions video. I don't like making predictions. I like talking about probabilities. And here's what I believe is going on with the company. So let's start at the left side. Let's say you don't own any shares in Tesla. You don't know anything about it. Let's start by looking at the fundamentals. In 2020, they made 75 cents a share. 2021, they basically quadrupled that or tripled that anyway to 226 a share. Then 407 a share, quite a lot of growth there. And then there started to be some pricing pressure in 2023, so it reduced down to 306 a share. And then you're seeing a little bit of a gain in 2024 this year. That's kind of good, but kind of mixed. It's pretty good, okay? And I'll tell you why it's good. If you look down below, look at that. You got a lot of double-digit quarter-over-quarter growth, then some triple-digit, and then you got some double-digit quarter-over-quarter growth, and you got a couple of quarters with negative growth, right? Because it's hard to keep up with what they're doing when they're lowering prices to try to get market share. So that's their strategy, kind of like what Amazon did a few years ago. They took all their profits and rolled it back into buying trucks and distribution centers so that once they quit doing that, their earnings just soared. And that's what I think is going to happen with Tesla. And they got very little debt. And if you look at the right side down here, the sales is 65%, 81%, 42%, all double digits until basically this last reported quarter, which is only up 9% in sales. So it's still increasing its sales. You want a company that's increasing its sales. You also want it to be increasing its earnings, but it's giving up earnings for sales. That happens. Now, if the EV market continues to go, this company is positioned well because it's got high market share. The Model Y was the best-selling car in the United States last year. So let's go to the right side, and you'll see I've drawn a ton of little lines all over this thing, right? And so you can see we're in an uptrend now. This stock has been basically in a long consolidation for a couple of years. You could actually say it was in a downtrend. If you sat through this with me, it's been rough. But you're seeing the stock recover, like I've always believed it would, because its sales is now continuing to grow, and I think they're going to be very profitable. Now, I'm trying not to cloud my opinion of the stock with all the things that I know about it. I'm just going to look at it as it is on the screen. So you can see there's a down channel here where it's made lower highs and lower lows, just kind of done that. And then it reversed that channel about 4 weeks ago. It bounced off the 200-day moving average and the 50, averted, so far it's averted a death cross. And so for the last 3-4 weeks, it's been in that bounce, right? And it's now on, it's got its new channel that it's forming, which is going from lower left to upper right. This to me looks like a squeeze heading up to its not its all-time high, but its last year and a half high of around $300. I think it's like $298. So I think that's where the stock wants to go. It's got a couple of swing points to get through that are minor on the way there. Once it gets to that $300 level, that's a test. Now, if it goes through that $300 level and it does it on, let's see, 725 million shares for the week, and it does it on more than that, like a lot more than that, now we're talking about a stock that's got a breakout to the upside. So that's your breakout point, is that 298 level, right? But you could start nibbling away at some of the position here, depending on what the market's doing, of course. And when it gets to that 298, that's your spot where you want to really buy a bit more, right? And add into your position, pyramid in, we call it. All right. So that's kind of, if you look here at the chart, just above the $300 level, there's a few spots where it got to and it couldn't kind of get through that on low volume. So I don't think those are going to be an issue. The next major spot is going to be this spot back here at 384. And that needs 386 million shares for the week to break through that. Now, I think that's where the stock is going. It's 384. The stock is at 248. That's 130 points from here. And I believe that once the stock can build cause to go up to that 300 and break through on some decent volume, I think you're talking about 384 before it puts the brakes on. And then it wants to make a run at that 414, which is its all-time high. And if it wants to go higher than that, which I think over time Tesla will, it's got to do 541 million shares and significantly outperform that to break out through that. I think that's all in the cards for Tesla. But I'm saying the prediction for Tesla this year is that 350 level, maybe that 384 level, somewhere in there, because I think if you take this increase that we've had from basically April all the way up to its high there of July, that same distance is the distance that it could run from this bottoming point of where is the bottom? 194, all the way up to that 350 level. Okay. So stocks have symmetry. If you've heard my videos before, you know that they kind of run in symmetrical patterns for some reason. I don't know why. It's kind of woo-woo, but it does it. And so I think that's what we got in the cards is that symmetrical run up to 315.